This is a stock picker's market. The question is, which stocks should you buy? And more importantly, at what prices? Today, I'm going to cover 10 stock picks chosen by the community. We'll break each down. We'll look at a chart for each, and I'll tell you what levels are attractive to buy. Let's get this party started with Shopify, down 20% after posting earnings this morning. Now, this stock is down 16.46% year to date. Over the past year, it's down 4.19%. Now, with that said, this was $23.63 back in October of 2022. At first glance, earnings look pretty strong, a beat on the top and bottom lines. So why is Shopify down 20%? Headline: Shopify Q1 results eclipsed by GAAP loss and margin shrinkage in Q2. So this stock went from a GAAP profit to a loss, also a 50 basis point decline in gross margin. Now, to make things even worse, the guidance is also weak. Shopify said it sees second quarter revenue growth slowing to high teens percentage rate year over year. The problem is this was a very expensive stock. It still is. And you can see for this quarter, they just reported 23.2% year over year growth, but that's slowing down into the teens. Now, it's always a little bit tricky because Shopify does have some recurring revenue, but you're still going to look at these base stats for a stock like Shopify. And if you look at the forward GAAP PE, you're looking at 108.75. Price to sales forward is 11.58. So this is not a cheap stock. So every single Wednesday in the private community, we do something that's called chart day. When you see orange on your screen, that's going to be a previous chart day. Yellow is typically today's chart day. Most of the charts I show you are not going to have yellow. I'm just going to talk through them. And we're long-term investors. Generally, what we're doing is we're using technicals to get better entry and exit points. And we're usually investing for 5 or more years unless the story changes. Now, at the very top, this is the most recent chart day. I said it's going to depend on earnings. I could see the stock much lower later in the $60 range. And this morning, it got in the $60 range. You can see it just broke this S3. The S3 is 61.23. And of course, the stock had a huge run from $23.63 back October of 2022 all the way up to $90, $91.57. This was February of this year. So you can see we're below the moving averages. We're just at the S3, and this trend line is closer to $55. I generally like to buy when we're under the moving averages, especially if we're below like an S3, and I like to buy near the trend line. So this is kind of the target area where I'd probably add shares. So if you don't own Shopify, I think that $61 is a good entry price. And generally we use dollar cost averaging DCA. There's always a chance this could come lower in the 50s. I think it's more attractive the closer it gets to $55. I'm not saying that's going to happen for sure. I'm just telling you the prices I think that are attractive. And remember, even at these prices, the stock is definitely not cheap. Up next, we got Rocket Lab. I did buy shares yesterday about $3.75. Earnings were pretty decent. You see a slight miss there on revenue, but up 69% year over year. Earlier this year, I came out with a video. I said I like Rocket Lab $4.50 or less DCA dollar cost average. And I said I prefer if it pulled back into the threes. You can see recently here it bottomed at $3.47. Now in Discord, we have been buying pretty heavily around this $3.50 level. And like I said, I bought some shares yesterday at $3.75. I currently own 3,000 shares of Rocket Lab. I consider this spec a 2030 plus play, so it's something you have to hold for very long term. And as you can see, it's also not a dirt cheap stock or anything. It's 4.63 forward price to sales. Datadog, another stock that I do like, beat on the top and bottom lines, did have a bit of a sell-off. Most of that is valuation. And anytime you have earnings, there's always some digestion. You can see that we do have analysts coming out, upgraded to outperform from neutral and $140 from $130 on that price target. Now, of course, that's not a reason to buy. It's just good reference. Datadog is a stock that we've been bullish on in the private community for quite some time. Most of those buys were $75 in that range, $65, etc. Most recent chart day, we said it had a big range, $111 in the S3 at that time and $146 on the R3. So we were kind of in the middle, and we said there's a huge range to the upside or downside depending on earnings. Earnings were pretty good. It did pull back. You can see it didn't quite get to the 200-day moving average. Also, the S3 here is $111. So it did have a nice pullback. It's not a cheap stock here either. If you don't own it, it could be an area to maybe nibble in this range. I prefer it much closer to this trend line. And that's going to be below $100. Again, no promise that'll happen, But if it's me, that's probably where I'd be more willing to buy shares. And of course, it depends really on your risk tolerance and your blueprint. Celsius with a rare miss. It did beat on the top. So the Q1 GAAP EPS 27 cents, beat by 8 cents. Revenue 355.7 million. That missed by 34.12 million. And the growth there is 36.9% year over year, which is solid, but you'll recognize it is slowing down. Overall, Celsius has pretty solid profitability metrics. In fact, it's making $344,000 net income per employee TTM. And the growth has been pretty solid. You can see the numbers on your screen, but slowing down a bit. So valuation is going to come into play again. Now that forward GAAP PE, 68.81. Certainly not cheap, but if it has the growth, it's going to trade at a premium valuation. You see that growth slow down, the stock could have more pressure. Price to sales, TTM, 12.6. Forward price of sales 10.31. Now, this is a stock that we do own in both portfolios at much lower prices. You'll remember back in 2023, I came out with a 12 stock portfolio video, and Celsius was on that. And it got a lot of heat, but the stock has done very well. It's done a stock split since then and so on. When it got up to $99.62, even when it was in the 80s, we said FOMO Chasers Pizza LLC. That just means, FOMO, fear of missing out, careful chasing. We thought it was a little bit expensive. It did pull down here to 67.27 on this 100-day moving average. And you can see it got up close to the 50 and then pull back again. Now the S3 is $56.28. Generally, again, I'm going to prefer a stock, somewhere in here. Of course, it got pretty close here at $67. You don't have much of a great trend line here, but you can see a lot of these stocks just were running really hot, and you have to be careful chasing these. So every single week in chart day, I was saying, hey, be careful chasing. Make sure you understand what you're buying. Don't just pay any price for a stock, and so on. I prefer this stock obviously much lower. In fact, under 50 is probably where I'd add more shares personally. I'm not saying that's going to happen again, and I do like the stock longer term, but remember what it is. It's an energy drink company. Will it do well longer term? I absolutely do think that Celsius can do well longer term, but I'm not just going to pay any price, especially for something like this, doesn't have recurring revenue and so on. Now, a community member picked Boston Scientific Corporation, ticker is BSX. And you can see the R3 is up here at $78.61. It certainly could go up there. You can see this gap up, but it's way above the moving averages. It's above everything. You have to be really careful chasing a stock like this. Look at the trend line. The trend line's way down here at $53. And I'm not saying that has to happen or anything. It's just normally where I just don't like to buy these prices myself. On Seeking Alpha, A+ for profitability. Growth, okay, but 11.43% forward revenue growth. Valuation, you've got a PE gap forward of 50. It just seems a little bit expensive to me personally. Now, here's a stock that isn't all that expensive. It might not be the most attractive to everybody's portfolio. Profitability metrics here in A on Seeking Alpha. The growth, modest growth here, forward revenue growth of 8.32%. The valuation, though, you're looking at 13. This is a PE gap. The PEG ratio is quite low. In fact, the PEG non-gap forward is 0.47. Anything under 1 is generally attractive. Headline, Expedia's guidance cut triggers downgrade price target cuts while Booking advances. So Booking Holdings outperforms rival Expedia as VRBO Vrbo drag leads to lowered guidance. Now, if you look at VRBO, it's really the primary competitor to Airbnb. I do own shares of Airbnb, and I have been nibbling some shares here of Expedia. I'll show you a chart. And I think it's very possible the stock could see more pressure. My next buy area was just below $110. It didn't quite get there today. You can see it's at $112 right now. Looking at that trend line, that greater trend, about $100 a share. Ideally, if this stock got under $100 a share, I'd be very comfortable, adding quite a bit more shares to my portfolio. You can see the stock was $160 here just in February of 2024. Not where you want to buy. And going back to December of 2022, this was $82 stock. So you can see it basically doubled. It's below the trend lines. It's below the Fibonacci pivot points. And I do think it's attractive here, that $115 or less DCA. This isn't going to be a banger stock for anything. It's not hyper growth, but I just think it's attractive at this price, this valuation. And I do use Expedia quite often when I book my own travel, and I like using it. I generally use Airbnb and Expedia. Now I've got 4 more stock picks. If you like this type of format, we do something very similar every single Wednesday live. It's called Chart Day. That's at 9 o'clock a.m. Eastern. We cover QQQ, and 20 individual stock tickers that are chosen by community members. Those are generally about an hour long, sometimes longer. I'm very candid and I add a lot of real talk into the conversation. You can go watch every single chart day we've done over the past 4 years by joining for free. Give us a try. You've got nothing to lose, no strings attached. Visit patreon.com/fired up wealth. Now, this is a stock that I honestly have never looked at before. Derek from the community just did a bunch of due diligence in Discord, and you do have to be careful with this. It is OTC, so this is over the counter. Tektronic Industries, the ticker is TTNDY. I personally wouldn't buy at these levels. It's way above all these trend lines. With that said, the R3, it could have, the possibility of going up to $74, $75. I look at risk reward. Is this where I want to buy it? Been much better buy down here, $40, $50. So it's been a few weeks since we covered this one. Ticker is SNPS, Synopsys. And we said that it was still a bit elevated, but it has come down. This 508 actually broke the 200-day moving average. Now, with that said, the S3 is lower at 459. Looking at the trend line, it did break the trend line. So if you're buying this stock, you have to do your due diligence. Of course, fundamentals first. That's 99% of the puzzle. The last 1% is going to be the technical analysis here for long-term investors. But this would be a general area to DCA, knowing that it could go lower and they'd buy more shares. Of course, now it's up here though at $549 a share. So this was really the opportunity. I think this has momentum and it could certainly go higher. This R3 is up here at $627. This is an interesting one. This is Jumia Technologies, JMIA. So this is going to be African e-commerce. Now you can see this is a big pop from $3.86. Generally, we won't even cover anything if it's a penny stock, $5 or less, but now it is trading over $5. You want to make sure you do your homework and the fundamentals here. And obviously, you don't just buy off of a chart ever. So looking at the chart here, 122% over the past year. Year to date, it's up 92.86%. But if you zoom the lens out, so since this went public here in 2019, over the past 5 years, it's down 73.55%. Market cap is $655 million. This is what I would consider a spec stock. So what I said in Eric's watch list in Discord, I said the next price target for me to add shares, so I do own this stock. If it got below $20, that's where I'm going to buy more shares. Now, this is software as a service, SaaS, has recurring revenue, and it might not break $20. That's just where I'd personally be buying more shares. You can see the S3 is down here at $19.77. I also said in Eric's watch list, this stock is somewhat speculative, even though it has some profitability metrics. The reason for it, it does have competition. It doesn't necessarily have a strong moat or anything like that. I think you have to also watch what Google's doing. There's certainly risk to this stock. So it's a small position for me based really off the fundamentals. I just think it's undervalued in this $25 and less DCA range. If content like this is helpful to you and you're new here, subscribe to the channel, click that bell for notifications. And if you want to return the favor, drop me a like and drop me a comment. Thanks for watching. Have a great rest of your day. Take care.